high dividend paying stocks for income in retirement. It's a common strategy used by the investment industry. Getting up there in age, you want to start to take an income from your portfolio, start to buy companies that pay lots of dividends, live off of the dividends, and you'll live happily ever after. Is it that simple? Well, let's take a look at where dividends come from. Number one, a company has earnings. They sell things, they have their cost of goods sold and all of those expenses, and they have earnings, and they will split those earnings two different ways. Number one, they'll pay a dividend, and they may retain some of the earnings back in the company to grow the company in the future. More about that in a second. So if we're having companies that pay lots of dividends, we got to think about this a little bit. Let's say if I have a company that I paid $100 for their stock and they pay a $3 dividend. That would be a 3% dividend rate, right? Well, what if I want to increase or have a high dividend paying company? The price might be 50 with the same dividend of 3. Now that would be a 6% dividend. Now think a little bit about this. If the price over here is 100 and the price of this stock is 50, the question is, well, why? Well, could it be that the company is in distress and investors don't think well of the company, so they won't pay as much for it? Now, the question you have to ask yourself, does it make sense for an older investor trying to live off of income to be just buying distressed companies for their investment portfolio? Probably not a great idea. Now, there are other issues you might be dealing with dividend-paying stocks. Number one, if they're paying lots of dividends, it may mean that they've run out of growth ideas because they're not retaining earnings for the growth of the company in the future. Another thing is they could run into difficult economic times and they can't pay their dividend anymore. Or maybe there are competitive pressures that cause problems for them paying dividends in the future, creating reductions in sales. And tax policy may change. They may increase taxes on dividends and companies decide they don't want to pay dividends anymore for that reason. So a lot of problems, potential problems with dividend paying stocks for retirement income.